What is margin level? Margin level is the ratio between a trader's fund to the margin used in open positions. This ratio is expressed as a percentage. By paying attention to a margin level, a trader can see whether he has enough funds to open a new position or keep an open position open. The margin level can be calculated using the following formula. Margin level equals equity divided by margin times 100%. Let's look at this example. Imagine you have an equity of $1,000 and you open a position that requires a margin of $400. Then the margin will be 250%. This means that 250% of your funds are available to open a new position. A basic rule that the traders need to know is that the higher the margin level, the higher the amount of cash available to trade. And the lower the margin level, the lower the amount of cash available to trade. Stay tuned for more educational videos from CGFX. Trade your way to success.